Donovan. There's been talk about basically rolling the GSEs and FHA back out of the marketplace, specifically high-cost areas, which in California and other states is going to have a huge negative hit. I guess my question is, from all the studies I've seen, it seems like those loans are performing very well, the new loans are making out there today. Yet I don't see a private sector capable or ready to move in and backfill the place of the GSEs or FHA if you do pull back out of this market. And based on everything I've seen, they're filling the gap that they were intended to fill, and you are too. Do you think now's the appropriate time to start rolling back when there's no evidence that the loans you're making are not high-quality loans?
Congressman, as you know, unless Congress takes other action, on October 1st, the loan limits would step back from a high, at least in the highest cost communities, of about 729,000 down to 625,000. So in our housing finance reform proposal, we did say that we think Congress ought to let that expire as it would under current law.
And why would you say that? If they're performing well, why would you say that?
And we do believe that it's important, and specifically speaking about FHA here, that we start to step back to our more traditional role of serving a segment of the market, a smaller segment of the market. And from what we've seen, and I agree with you that the market is fragile, that's why we need to take all these steps carefully. We do see capital increasingly returning to the jumbo market. We have seen, particularly, for example, as we've announced the premium increase that we did for FHA, increasing interest from the private mortgage insurers. So we do believe that we can do this carefully and responsibly in a way that private capital will step back up. We've seen indications of that in the securitization market and elsewhere in the jumbo market. But I agree with you, we have to watch this very carefully to ensure that we're not taking steps that could hurt what is a very fragile market at this point. So we believe that the step down of the loan limits is something that that the market can absorb, and particularly in FHA, where those loans, the loans above the 625 and below the 729 make up a very small share of our overall business that we're doing today.
But you're going to take your portion out, and the recommendation is to get the GSEs out of the high-cost areas also. You're talking about capital marketplace. I'm not finding anybody else seeing. The realtors aren't seeing it. Builders aren't seeing it. Homeowners we're talking to aren't seeing it. The only loans that are available out there based on everything we're seeing between the GSEs and FHA, you're 92% of the marketplace. So if there's a private sector backfill, you wouldn't be 92% of the marketplace. It would be significantly less than that. You would see a decreasing number as the private sector rolled into the marketplace. We don't see that number decreasing, I guess, is the problem. And you're sending a message to Congress from FHA and the comments on Freddie and Fannie that they can be rolled back. But the problem I've always had with the system, for example, is, let's take a GSE, for example. You might have a limit of 429, yet with an area where the median home price is 150,000, they can borrow 429. Yet nobody in our districts can borrow a dime because that's so far below the median. I think it's from 2000 to 2005, FHA loans went from 99 to 1. So 2005, 1 in our area. And you go back to the old traditional marketplace you were in, there'll be no FHA loans in the marketplace. And my concern is, I'm not borrowing from FHA, so it doesn't matter, but you're looking at a marketplace that is very stressed at this point in time. I don't think it would take a lot to have it start going in the other direction. And I'm afraid that we're moving too proactively in the vein of pulling back and not considering the consequences that might occur if the private sector marketplace is not back there to fill the backfill on it. And if we let you move back, we don't authorize the dollar amount, you're out of it and there's nothing you can do. What will you do then?
Well, again, Congressman, the step that we're talking about is not to go back to the old FHA limits October 1. It's simply to go to the HERA limits down to the 625,000. And within FHA, the portion of our lending that's between 625 and 729. Even in California, it makes up a very small share of the lending that we're doing. But again, we are very cognizant, and I know Secretary Geithner was this morning when he testified, that we have to take these steps carefully. We need to see how the market develops, and we need to ensure that we're not taking steps that hurt the market.
And I want to encourage you to send that message to Congress because it's not getting through. That you're not talking about pulling out, you're talking about phasing down slowly from 729 to 625, test the market, and then go from there. I don't have a problem with that. But the debate's occurring around pulling out completely, getting GSEs out completely getting out of high-cost areas, and that would devastate some of the states that need it.
Gentleman's time has expired. The gentleman from California.